Yeah, so why are yields so low? Look, I mean, I think part of it is clearly central bank policy has driven yields a lot lower, and that has, clearly made a situation in the markets where asset prices have risen, particularly riskier asset prices, whether it's equities and high yield. But when we think about the markets right now, why are yields so low if things are so good in the economy? I think when you ask people, what are the risks that are out there? People will name a bunch of downside risks right away. And it's very hard to name the upside risks. So there's a skew in the distribution of how people perceive risk. And if they believe that there's more downside risk than upside risk, they're naturally going to gravitate towards, say, U.S. Treasury yields, high quality assets. That's going to keep interest rates low. In many ways, this creates what I kind of call a virtuous cycle. And the virtuous cycle is the lower these risk-free rates are, the higher those riskier asset prices can be, like equities and high yield and things like that. So that's part of the story.
The president said in Davos, if but for the Fed, we could be 10,000 points higher. Quincy, where do you see the markets going, and how does what the Fed does playing into what we'll see in the next 3 months?
Well, the Fed is obviously very important because we saw the pivot on January 4th of 2019, and that just changed the direction of the markets. The only thing that I'm concerned about is if they stop putting money in supposedly for the repo market. There's a question as to whether or not that's quantitative easing. Is it a derivative of quantitative easing?
You're predicting a taper tantrum?
Well, that's what people have been talking about. You can call it whatever you want, but the Fed's balance sheet has increased, and that's provided liquidity. Is it the only reason the market is up? No, but I think it certainly is a contributing factor. And if the Fed does start pulling away, perhaps we get a pullback. Look, the market is overbought from any metric. You don't have to be a technician to say that the market is overbought. Something is going to pull and cause consolidation and profit taking. That's actually healthy. The underpinning for the market is strong. And that's why we think even with a pullback, maybe because of a pullback, we'll start to see more money coming in from this.
Jim, I really wanted you to disagree with your boss there, with Mr. Gorman, but you didn't. You basically bought his line. You're good, clever move. Are interest rates as low as they are because economies are weak or because inflation is dead?
I think it's because inflation is low. I wouldn't say dead, but I would say it's low.
Exaggerate for emphasis.
Yeah, right. And it's probably not going to rise anytime soon. So, look, I mean, I also think that this is a big singularity in the market. And by singularity, I mean this is a nodal point where a lot of information crosses through. Low interest rates are driving these asset prices higher. If these rates start to rise, even a little bit, I think that we can have
some froth comes off the top.
I think some froth comes off the top for sure.
Well, I also want to add that even though this summer we had $17 trillion in negative interest rates, it's only now $11 trillion. Money is still coming in from overseas. I mean, the German 10-year bond has inched up, hoping to go to zero, but it's at, I think, minus 0.2%. Money is coming in from pension funds. Money is coming in from insurance companies to get a yield in the U.S. That pushes the yields in. It's not a referendum on the U.S. economy.
It's a liquidity effect as well.
Exactly.
It's cash flow.
Where are you finding opportunities right now? Quincy?
Well, in the market, I mean, we're broader than just the U.S. market. If the dollar stays in this lower range, trading range, it certainly is helping emerging markets. And if China comes off the bottom, which we expect some green shoots, that also helps emerging markets. And
what do you think, Jim?
So look, emerging markets for sure. I think in high yield, I think going a little bit down in quality, even to the triple C's, single B's. I think that's where where the real juice is in the fixed income markets. Emerging markets, I think, as Quincy mentioned, if the dollar stays low and stable, that's going to be a boost as well. And I'll even dare say the auto sector. I think the auto sector is actually starting to, as long as the consumer stays strong, it's been a pocket of weakness. We think that can have good returns.